Welcome back to The Explainer. We're all about turning complicated stuff into simple, actionable advice. And today we are diving into a topic that hits the wallet of every single entrepreneur out there: tax deductions. So let me ask you a question, and I want you to be honest. Are you overpaying your taxes? For small business owners, this isn't just some random thought. It's a really important financial checkup. And if you're like most people, the answer's probably yes. But hey, don't worry, that's exactly what we're here to fix. The reality is, so many entrepreneurs are leaving serious money on the table. It's not like you're doing it on purpose. It's just what happens when you're busy, actually running your business, and you don't have time to memorize every single page of the tax code. And it's totally understandable. You're juggling a million things. But these little missed deductions, they can add up to thousands and thousands of dollars in lost savings every single year. And that's money that you could be putting right back into growing your company. All right, so let's get into it. We're going to start at the very beginning. We'll look at two really key deductions you can claim before you've even made your first sale. This is all about setting your business on the right financial path from day one. We're talking about the money you spend before you officially open your doors, and the very space you work out of. Honestly, these are probably the two most commonly overlooked deductions out there. Okay, so what's up with this number? Well, it's a pretty powerful head start. The IRS actually lets you deduct up to $5,000 in startup costs in your very first year. We're talking things like market research, getting your licenses, initial advertising. It's an immediate win. Now, for the home office, there are two magic words you have got to burn into your brain: exclusively and regularly. This means that space has to be 100% dedicated to your business. A desk in the corner of the guest room that also gets used for, personal stuff, that's not going to fly. And here's a little pro tip for you. If tracking every single utility bill and repair seems like a total headache, look into the simplified method. It's way easier, just a flat rate based on your square footage. Okay, moving on, let's talk about the costs that are just part of your everyday business life. The expenses that keep the engine running day in and day out. So for your vehicle, you basically have a choice. The standard mileage rate is super simple, but sometimes tracking all your actual expenses can give you a much bigger deduction. The most crucial part, though, no matter which method you pick, is to keep a detailed, meticulous log of your mileage. You have to separate business from personal. Taking a client out for lunch, grabbing a coffee while you're on a business trip. You cannot forget this. 50% of that cost is usually deductible. It is such an easy win that so many business owners just forget to claim. But here's the thing, there's a catch. Having the right paperwork is what turns a regular meal into a smart tax deduction. All you have to do is make a quick note on the back of the receipt, who you were with and what business you talked about. That's it. Okay, now let's try to reframe how we think about some expenses. It's time to stop seeing them as just costs and start seeing them as what they really are: tax-deductible investments in your company's future. Just think about it for a second. Paying for business insurance, taking a class to get better at what you do, or even hiring a lawyer for some advice. These aren't just money going out the door. They're investments in your growth. And guess what? They are also deductible. So that certification you've been looking at, or that online course that could upgrade your expertise, that's not just a smart career move. It's also a fantastic opportunity to lower your tax bill. This is a big one. People get this wrong all the time. The money you pay your accountant to do your taxes or a lawyer for business advice, those are not personal expenses. They are 100% deductible business costs that help you run your company the right way. Okay, you ready for a pro-level tip? This is a really powerful deduction that a ton of eligible business owners completely miss out on. Seriously, it's a potential game changer. It's called the Qualified Business Income Deduction, or QBI for short. Let me put it simply. If you qualify, it lets you take up to 20% of your business profit and just not pay taxes on it. Yeah, it's a huge potential saving. This one can lead to some massive savings. It usually applies to people who are sole proprietors, in partnerships, or have S-corps. But you have to know that certain types of service businesses have stricter income limits. And because the rules can get a little specific, this is definitely one where talking to a tax professional is a really good idea. Okay, so knowing about all these deductions is awesome, but actually claiming them without stressing out requires a simple, consistent system. It's all about being prepared. So here it is, your simple 3-step action plan to make sure you're always ready to maximize those savings.
Just snap a photo of that receipt the moment you get it, log your trip right when you finish it, and do a quick review once a month. That's really all it takes. So the main point here is to be proactive and stay informed. Managing your taxes the right way isn't just about saving money in April. It has a direct impact on your bottom line and your ability to grow your business all year long.
By turning this knowledge into action, even if you just focus on one new area, you can start keeping more of your hard-earned money right where it belongs, reinvested in your business, fueling your vision for the future.